Hi, I'm Cody from Wall Street Breakdown. You know, earnings season, it's one of those things. Sometimes it's just in full swing. Yesterday, we went through an exorbitant amount of earnings calls. That's right. Today, Thursday, October 26th, 2017, we're back with 13 other earnings calls, and I left a lot of earnings calls out there that they couldn't take prominence over these ones, but it didn't mean they weren't important as well. So let me tell you, if you think these are the only 13, there's a lot of work out there to be done, because I looked at a lot of other earnings calls that just didn't fit the bill as far as how big these companies were, but still pretty significant. Let's get started. So what we're gonna do, we're going to breathe. We're going to put all of the times that we start the different earnings calls down in the description. You know how we do these big earnings recaps. You're going to get all the times down there so you can go and take a look at the specific earning call that you are looking for. I am parched. This is going to be a long, long video. That's Anthony. That's Wall Street Breakdown Anthony. How did he get out of that cage that we had him in? That's Wall Street Breakdown Anthony from the podcast. That guy is not allowed to be out on his own. Ultimate Warrior. I'll pass that off. There we go. We are ready. We are going to look today at earnings from Microsoft, Western Digital, Mattel, Amazon, Alphabet, Gilead, Ford, Twitter, Time Warner, American Airlines, Anheuser Busch, InBev, Raytheon, and Bristol Squibb. That took a couple of minutes just to tell you all the companies. We're going to start off with Microsoft. Earnings per share of 84 cents, beat the street by 12 cents. Revenues of $24.54 billion. That beat the street by $980 million. Microsoft had a really good earnings call. Microsoft's revenues were up 11.9% year over year. They passed the $20 billion in commercial cloud ARR in 2017, which was their goal, and they've surpassed it already. Intelligent Cloud up 13%. The Azure Cloud revenue up 89% for Microsoft there. Commercial sales of all the different word processing programs and PowerPoint, all the Microsoft stuff, up 42% as well. So for stuff that's out there already and people have past generation versions of these things, for the sales to be up 42% still for Microsoft is a great quarter. Microsoft announced nothing but good stuff. They closed the day 78.76. That was only up 0.16%. But I can tell you this earnings call, I think people are probably going to, despite the fact that Microsoft is trading fairly high, there's no signs of slowing down. They've changed trajectory out of the personal computing software, and they are full on into cloud, going so diligently and well. It's working out so well for Microsoft. Excellent earnings call, excellent way to get things started. Western Digital, earnings per share of $3.56, beat the street by 26 cents. Revenues of $5.18 billion, beat the street by $40 million. That's up in a revenue number of 10% year over year. Now, the thing on this earnings call, I think that's the most prominent, is still going to be that they are not letting this Toshiba thing die. They're not going to let Toshiba sell the chip unit off to Bain Capital and its consortium. There's definitely going to be some fighting left with Western Digital, who thinks they do have some sort of final say as to who either it gets sold to or that they don't want to sell it themselves. They believe they have a final say. We're going to see how that plays out. Western Digital closed the day 89.38. That was up 2.39%. Western Digital it's this is a bit of a soap opera at this point as far as the Toshiba chip unit goes, and a deal needs to be closed relatively quickly for Toshiba. They've got some serious issues on the table for themselves, so they need to get this finished. I'm not entirely sure if Western Digital is going to end up anywhere except maybe in court afterwards if Bain Capital does end up winning out on this. Mattel not having an excellent quarter. This is an earnings call that for a toy collector, a guy who, I have thousands of Barbies. They're all over the place. Not Barbies, but I do collect toys from Mattel. Mattel's earnings call was brutal. It was brutal. They're suffering, right? So Mattel, earnings per share 9 cents. That missed by 50 cents. 50, not 15, not 5. That was a EPS of 9 cents that missed the street estimate by 50 cents. That is a miss. Revenues of 1.56 billion missed by 260 million and down 13.3% year over year. They had to temporarily halt trading for Mattel, as Mattel at one point in time was down 27% in the after hours. That is a bludgeoning as far as possibly the most iconic toy maker ever goes. That's probably them. Better than Hasbro? Would anybody disagree? As far as iconic toy maker, Mattel crushed in the after hours. I imagine we're going to be seeing more of that tomorrow morning. They had sharp revenue drops in American Girls and Fisher-Price brands. It's a bloodbath over at Mattel, and they're pulling back so much on what they're pushing out because of Toys R Us and all that they're not winning on multiple fronts. It's not looking good over there. I don't know. Maybe if you were short Mattel going into this, you might be all right with that. But licensed professional financial advisor, I'm going to say it right now, I start talking about shorting anything, you better be talking to somebody that's got some certificates about something, because that isn't a great idea to just be jumping into. But Mattel, if you probably were short going into this earnings call this afternoon, you're probably going into tomorrow in the money, which is not a bad way to start a Friday. Anyways, Amazon, here we go. Amazon, big company, reported earnings today. EPS of 52 cents, beat the street by 49 cents. That is significant. That is double what the street estimate was. Revenues of $43.74 billion beat the street by $1.6 billion. That's up 33.7% in revenue year over year. That is big, big money. There's no two ways around it. 35% sales growth in North America, 29% sales growth in international waters. Alibaba, 29% growth internationally. Don't think Amazon's pumping the brakes at all. That's for sure. Amazon's coming in a lot of directions. Whole Foods, that transition's just really getting underway, and Whole Foods is going to be a powerhouse. Amazon's Alexa is, again, it's right in the mix to become a front runner as far as that industry goes. And they've got pharmacy licenses in, I believe, 13 states now. And I mean, that probably is what prompted CVS to go out and make a bid for Aetna for $66 billion. Because why else would you go out and do that unless you felt the pressures of a company from a completely different segment coming into your sector saying, we got money, we'll set up shop, watch us set up Amazon pharmacies all over the place. So you see CVS responding to that. This Amazon earnings call was excellent. Numbers are up significantly. Amazon is doing a marvelous job. You know, I wish that Anthony guy was still here. It seems like there's, in the midst of all these earnings calls, potentially having a beverage to just quench your thirst. That's good tap water. That's high-end tap water right there. Alphabet reported earnings today. Alphabet, i.e. Google, earnings per share of $9.57. Beat the street by $1.24. Revenues of $27.8 billion. Beat the street by $600 million. That's a revenue number up 23.8% year over year. Alphabet is killing it from A to Z. There's just no two ways around it. Ad revenue, that's YouTube. Hey, that's us. That's us on YouTube. Ad revenue at Alphabet up 23%. YouTube. You know where to find me. Just saying. That's up to $24.1 billion on the year so far in ad revenue. Aggregate paid clicks up 47%, and the aggregate cost per paid click or per click down 18%. Alphabet with a very, very strong earnings call from a outstanding company. I mean, there's no two ways around it. And you cannot break down a company this large that does so many things in such a simplistic earnings call. If you're doing any type of investing, if you're thinking about investing in Alphabet or a company its size, please, there's a lot of due diligence to do. I beg of you, go out there, licensed professional financial advisor, do your due diligence. You know what you're doing. You're smart enough to get this covered, right? Go out there and make sure that you're doing it properly. Alphabet closed the day $972.56. That's down 0.08%, so not anything significant. It was a heck of an earnings call. Alphabet's a really expensive company to get into. I'm not expecting to see giant fluctuations off of earnings calls like this for a company like this, because I think we all kind of expect them to just be dominating, but they continue to dominate. And that in and of itself it's extremely impressive. When you consider just the Microsoft, Alphabet, and Amazon call in these first 5 earnings calls, we're talking about some of the best companies in the world. There's just no two ways around it. Gilead reported earnings today. EPS of $2.27. That beat the street by 14 cents. Revenues of $6.5 billion. Beat the street by $110 million. That is off on a revenue number by 13.3% year over year. Product sales were just down 13.5%. Genvoya, it was up 114.3%. One of their only drugs really driving it up. Epileusa up 37.8% in sales, but Harvoni down 47.7%. And I mean, when you take a look at the product sales numbers overall, down 13.5%, and then the revenue numbers down 13.3% year over year, you can see Gilead is having a bit of a tough time at market. It's just not being pushed. It's not being pushed as well as I would imagine they would hope, right? And you see Gilead 77.88 to close the day. That's down 2.52%. So the market definitely responding to an earnings call that, in the midst of all these other pharmaceutical companies that are doing earnings calls, that Gilead call, despite the fact that they did have that drug last week, the Yescarta, that got greenlit by the FDA, and that's huge. That is huge, huge. We're talking about just this earnings call specifically. The pipeline is maybe a lot better than what's out there as of right now. The growth that they want to see just really isn't there. Earnings from Ford, EPS of 43 cents, beat the street by 10 cents. Revenues of $33.65 billion. That beat the street by $850 million, and that's up 1% in revenue year over year. Operating margin up 5%. They had a lower tax rate, and net material cost efficiencies raised the bottom line EPS guidance. Ford is doing all right. I mean, Ford isn't the world leader in much. Like, they're not dominating any market space, but they are not laggards. They've had some issues with the compact vehicles not selling. They're clearly doing a lot better in the SUV and truck categories. I mean, we've seen the numbers month over month for sales. But Ford has been smart enough to, pull back some plants that do some of the more compact vehicles, give people a few weeks off. And that's not favorable for people that are trying to work, but for Ford, they understand the forecasting. They don't want to get too inventory rich. Ford, as far as the American automakers go, is probably the best of breed. Close the day at $12.27. That's up 1.91%. So Ford, it's a really good company. If you're already in it, I would imagine you're probably pretty happy being there. But Ford at $12.27, licensed professional financial advisor, you might be talking about a high number for a company where, in that industry, we don't know really where things are going at the moment. Ford definitely, they've got some good segments, but overall, it's still kind of just even waters, even though we're in an economy that's up. Twitter, here's a company that gets a whole lot of coverage, but doesn't really make a whole lot of money. EPS at 10 cents, beat the street by 3 cents. Revenues of $590 million. That's peanuts compared to everybody else that we cover here, but they get so much coverage because so many of us use Twitter, right? Like, Twitter's actually a fantastic medium. That beat the street by 3.27 million, so pretty small number. That revenue number is down 4.2% year over year. The EPS and adjusted EBITDA was up from last year nominally, and the average monthly users are up to 330 million. That's up 4% year over year. So Twitter is growing, but Twitter's they're not making the kind of money that they thought they were going to make. They thought there was going to be a real ad revenue monetization thing that was going to happen for them. And I think in the process, they started losing a lot of users that just became a lot They weren't putting the time in that they were at the beginning. Twitter at one point in time was a real bustling community that seemed like it kind of got lagged down by a bunch of spam and nonsense and too much noise and people with, problems. Too many people with problems. Let's just face facts. Nobody wants to hear your problems, right? We want to hear things that are interesting, and Twitter became a lot more difficult to really tolerate on a mass level. You really had to streamline your Twitter feed unless you really wanted to just deal with a lot of too much noise. And I think Twitter ended up suffering from it. It was difficult for them to monetize the advertising. Twitter, while it's a great little mobile app, I'm not sure if Twitter's ever going to really break through to the size that people were hyping like it was going to a few years ago. Time Warner EPS, $1.82, beat the street by 23 cents. Revenues of $7.6 billion, beat the street by $210 million. That's up 6% in revenue year over year. This is their highest quarterly growth at Time Warner in 13 years. HBO revenues up 13%. Turner revenues up 6.1%. Cash and free cash flow are both up. They closed the day at 98.97. That's up 0.25%. And you got to imagine that a lot of the hype behind Time Warner is going to be the fact that they are about to become a part of AT&T. So when this powerhouse does finally conjoin, and I mean, we make some sort of Voltron of the telecom and media industry, I mean, there's no saying where it's going to go, but if this company ever gets all this stuff passed through and they finally get together, Sprint and T-Mobile, that's a heck of a story. Amazon buys Whole Foods, great stuff. AT&T and Time Warner get together, that's going to be something else. I mean, we're going to talk about a company that covers that's in your life whether you want it or not, almost, because they just cover so much ground, significant stuff. Time Warner with a really decent earnings call, highest quarterly growth in 13 years. That in and of itself says AT&T's getting hooked up with a really well-run company. American Airlines today reported earnings per share of $1.42, beat the street by 2 cents. Revenues of $10.88 billion. That was in line, and that's up 2.7% year over year. 48.61 is what American Airlines closed, and people were not feeling the earnings call overall. Down 4.72% to close. American Airlines, it's a tough racket flying airplanes. It's just a lot of overhead. There's so many restrictions and licensing things. It's very, very, very small margin. There's not a lot of money to be made there. It's like running a grocery store. So while they make a lot of rev, a lot of these companies, because they're turning over flight after flight after flight nonstop, they're running those kind of flights because the only way they can make money is to have 100 million planes in the air at one time. It's because there's next to no money on each flight to be made. So they get great revs, but when you really break those company down, and we talked about this yesterday with Air Canada, I mean, if you're in an airline, must really be down the investing rabbit hole as far as I'm concerned, because there's so many other good type of companies that cross into sectors that are similar to the airlines that do so much better work that American Airlines with an earnings call doesn't make the market too happy, and I'm fairly bipartisan as far as getting into airlines goes for investing. Licensed professional financial advisor, you know how to do this. Anheuser Busch InBev, EPS of $1.31, beat the street by 12 cents. Revenues of $14.74 billion, beat the street by 20 million. That's up 3.7% year over year. They closed the day at $120.41. That's down 0.95%. I don't know much about drinking beer. I don't know much about that or drinking at all. But $14.74 billion in drinking. I don't know much personally about drinking, but I'll sell you all the liquor you want if you can get my numbers up to that. Anheuser Busch, one of the biggest beverage companies in the world. I mean, Anheuser Busch InBev, right? I mean, this is the big time. This is the big time. As far as liquor goes, this is where it's at. If you are anywhere near having this type of investment per the consumables, Coca-Cola, we talked about yesterday, Anheuser Busch InBev today, these are definitely, we're talking best of breed. Those are absolutely the ones, if you are thinking about it, again, licensed professional financial advisor, but that's a company worth looking into, especially if you know more about beer than I do or more about liquor than I do. See, I just don't know anything about it. So for me to get into it, I'd have to take it all on statistics and nothing on feeling. And it's a lot easier to do things on feeling. Well, unless you're like invested in Northrop Grumman and you're just invested because they got segments called missiles and you can just kind of feel that in your soul because you're a dude, but you've never actually like shot a missile, but you know what I'm talking about. Anyways, a company that does shoot missiles reported earnings today. I love these missile shooting companies. Raytheon. That's what I'm talking about. There's always money in shooting missiles. EPS of $1.97 beat the street by 6 cents. Revenue is $6.3 billion, missed by $30 million, but is up 4.5% year over year. They raised their guidance. Their missile system unit was up 9.9% because 9.9% of people out there just needed bigger missiles. That's not a bad problem necessarily to have. Integrated defense systems were only up 4.3%. That's off by about half the amount of good new missiles that were sold. So there's some people out there with integrated defense systems that just aren't cutting it. There's new missiles on the market. I just let you know. Maybe you want to upgrade your defense too. Probably call Raytheon. A backlog of $36.7 billion. Raytheon, much like the companies we've covered, UTX, Lockheed Martin, Northrop Grumman, when you're in this kind of business and you're in America, man, they're trying to outfit a lot of helicopters with missiles. That's just the way it works. You make a lot of stuff that helps to outfit those helicopters with missiles, you are probably in the money. They closed the day at $181.86 a share. That's down 3.87%. But Raytheon is never really a company to disappoint. In that sector, it's really tough to pick a winner. I mean, we've talked about probably the companies that are the top ones. Raytheon, while really strong, probably falls closer to that 3 spot. Excellent company, though. I mean, the defense sector, Republicans in charge, 3 more years. You know, just saying. We've been down this road before. I mean, if you don't learn from the past, you can be damned to repeat it. I mean, we know how things are probably going to play out on a political spectrum when it comes to this. I know we've talked about this before. If you don't pay attention to how things were in the past and assume that things might be somewhat similar just because it's the similar mindset that comes into power and then ultimately ends up making these kind of decisions, it's companies like these that benefit the most, because those type of decisions are definitely cast in the direction of militarization. Just saying. Good thing to look into. Always do your due diligence in the final earnings call of a massive earnings call here on Thursday, October 26th. Bristol Myers Squibb, earnings per share of 75 cents. Missed by 2 cents, but also missed year over year on the EPS by 2.6%. Revenues of $5.25 billion. Beat the street by $50 million, and that beat by 6.7%. So while the EPS was off a little bit year over year, the revs are up year over year, 6.7%. Opdivo selling up 38%, and it's a drug that's got a lot of hype behind it. Elquilis up 39%. The hepatitis C franchise, though, at Bristol Myers Squibb, really taking a beating, down 81%. Bristol Myers Squibb closed the day $60.95. That was off 4.77%. Bristol Myers, a heck of a good pharmaceutical company. This is not the greatest earnings call I've ever seen. So while Bristol Myers is doing a lot out there, you see Bristol Myers in the news still really frequently. I mean, probably the most out of any pharmaceutical company out there. You know, like you see them in the research and development field. Like they're out there making news constantly. But this earnings call I would consider to be a break even at best. Probably not going to do much more than to knock them down that 5% they're down, as opposed to really move them up. Bristol Myers, I think we expect more out of them. This really does shake up the pharmaceuticals, because I mean, we've had some marginal pharmaceutical earnings calls in this earnings season that we've been dealing with some dominating earnings calls, right? Like Alphabet and Amazon and Microsoft and Time Warner, amazing earnings calls today from companies that blew estimates out of the water, like absolutely just dominated things. We're looking for a pharmaceutical company to finally jump out, but I mean, there's new rules down in the United States as far as selling all sorts of pills, and because people are junkies. Don't be a junkie, by the way. That's just not a good idea for anybody, is it? Right? You're not going to make any money doing that. But there's all these rules. I mean, how does this end up trickling down and affecting these kind of companies? You see their revs not really growing the way you want. You see a lot of these drugs having a tough time really breaking through when they thought it was going to break through a lot more. You know, I'd like to see a couple of good, strong earnings calls out of some of these drug companies, but as of right now, we have not seen a really good one yet this earnings season. But who knows what's to come? 13 earnings calls. 13 earnings calls. We were only here for 25 minutes. That's nothing. That's expedited earnings calls for you right there. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button. Click the notification bell. Thumbs up for this video, all the videos Anthony's in that's been standing here the whole time. And Anthony's still here. Do the thumbs up and leave a comment. Leave a comment for Anthony. Tell him what a good job he's doing. Tell us what you think. We love hearing from you. Have yourself a wonderful day.